Hi, I'm Rajat. I'm the co-founder and CEO of FinBox, a fintech infrastructure company based out of India.
You've surely heard the saying that the best way to make money in a gold rush is by selling shovels. And in the current fintech gold rush, Finbox is the company that is selling shovels. Finbox has built the pipes that help fintech companies to ingest user data, apply decision making engines, and run their workflows through an orchestration engine. In this episode, your host Akshay Dutt interviews Rajat Deshpande, the founder of Finbox, about the business of making pipes for the fintech space and creating a global business out of that. Stay tuned and subscribe to the Founder Thesis podcast on any audio streaming platform to learn about building niche global technology businesses.
Let's start first with like an elevator pitch of Finbox. If you were pitching to me to raise funds, what would be your elevator pitch for Finbox?
FinBox essentially is a company that is building fintech infrastructure and credit intelligence APIs. So we are basically lending focused APIs that enable companies to build digital credit products. So these products could be buy now pay later, personal loans, business loans, B2B buy now pay later, working capital loans, etc. And we provide end to end, from sort of KYC, credit decisioning to dispersal integration with a bunch of lending partners. And on the other side, we have credit intelligence products.
Okay, interesting. So just to like make it a little simpler, one part of your business is fetching data, where you fetch data. It could be the Aadhaar, PAN, etc., or it could be the account information about the person. And this data is used to eventually arrive at a credit decision that should I lend or not. And the second part of your business is the decision making engine or the recommendation engine, which would throw up scores based on data, which would help a lender to decide whether to lend, how much to lend, etc.
No, so this is the first business. So basically, getting sort of using various kinds of data sources for decisions, and there are a different. So this is, you could say, a credit intelligence business, which includes fraud, credit risk, all of the other analytics, various data sources. Second business is an end-to-end infrastructure piece. So basically, say you are like an e-commerce player and you want to now start offering your own white labeled buy now pay later program. So you come to us and you integrate our API and SDK and you configure the product, and that's it. You are done and you can get started with the program in say about 2 3 weeks. We bring the lender partners and sort of help you construct the program.
It's like a plug and play digital lending product. Any company can launch a digital lending product through a plug and play solution that you offer.
Yeah, so that's one part, and then lenders also use it essentially. And the largest chunk of business today comes from our lending partners.
So one of your business lines is competing with Nero. Nero is in a similar space where they allow, let's say, an e-commerce company wants to launch a BNPL or any such product, they can do that through Nero. So something similar is.
Nero maybe sources these loans, but they also aggregate essentially. So basically, what aggregation means, say, in e-commerce is that you get inventory and then you take a margin, you sell inventory, right? So that's one thing. What we do essentially is we are a very neutral technology player. So what we do is what Shopify does. We're like, okay, take this tech, you talk to each other, build your sort of, you decide the commercials. We don't care about it. We will help you get to that. But we are not in the business of really aggregating you or you. We are just the pipe which is enabling this business to happen. And so we are a technology business, a TSP business, as it's called in India today. So there's an aggregation business, which is the LSP business, quote unquote, sort of a little fuzzy.
What are the full forms?
LSP is a loan service provider, basically, and TSP is a technology service provider. So we're not really an LSP, we are a TSP.
So what you're saying is that Nero already has relationships with lending partners and commercials, whatever the negotiations are already done.
Yeah, absolutely. So Nero could be our customer also in a way, right? Because ultimately we don't really care about or sort of try to aggregate these people, and sort of in my understanding maybe Nero does sort of take a little bit of credit risk, etc., or sort of, those things we don't know. We are a pure technology business and generally stand neutral in these sort of, business models. So we work with everyone. So Nero also potentially we could work with.
So these three products, one product is information and decision making, like capturing data and then reaching to a decision based on that. Uh, the second product is helping, like, say, a consumer, a B2C internet company to start offering lending. And the third product is helping a lending company to offer an online product.
But the second one or two categories is the same product. It's just, who's using it.
What is your customer profile like? What business do you get from lending companies as a percentage of the pie? And what business comes from a B2C internet company which is offering lending?
I think most of our revenue does come from lending companies. Say maybe about 20% is from lending companies, 30% would be from what we call as anchor partners. And I think that mix is going to remain because, of course, lending companies really have large balance sheets and they have a high risk appetite, and they sort of, move very fast with this. This is like not a side activity for them, it's their core business, and that becomes large very fast. And as we keep adding more and more lender partners, the lending sort of from the so from banks and NBFCs is at much more higher volumes than maybe a little bit of these B2C folks.
Because for a lender, this is core part of their business, whereas for a B2C internet company, this is an ancillary revenue.
Yeah, it's an ancillary revenue, and we do a bunch on very large anchor partners. We do a bunch, frankly.
Who are some of these anchor partners? You can describe them.
Large super apps, conglomerate super apps, etc. A bunch of those large B2B commerce platforms, or sort of,
B2B, like Udan types.
yeah, agrees. And then sort of more, B2B marketplaces for goods. I think we were one of the first guys, sort of in India at least, who published a blog saying embedded finance, XYZ Hoga. And we realized it fairly, I would say, during the first wave of COVID, and we built a product which was integratable, etc.
Your anchor partner customers are essentially customers for whom they would feel that there is a lot of promise in starting lending, which is why they would want to invest in building those relationships directly with the NBFC partners and then using your stack to enable that.
Yeah, yeah, absolutely. Ultimately, lending does a bunch of stuff on platforms, and is, different platforms have different motivations. For example, some folks do it for monetization, right? That's the best way to monetize sometimes.
So these companies would earn a spread, or would they earn like a referral fees, like every loan that?
Both models exist. Both models exist. Mostly, I would say it is referral based, but in certain cases, it's spread based as well.
So you were saying why these platforms want to offer lending?
So yeah, one is monetization. Another is essentially more retention, better user experience, or sort of completeness of product, right? So good product experiences, etc. Third is, basically, for example, in e-commerce or B2B e-commerce, it leads to higher, average ticket size or ACV. Basically, average cart size, etc., increases by 30-40%. And we've done like a fairly deep dive on the numbers here, and it does meaningfully change the dynamics of these businesses.
Okay, interesting. What are some numbers that you track? Is it like number of loans originated, or is it your ARR, or?
So there's a bunch that we track. I think, see, because they're separate businesses and we are a TSP business, we basically track API calls.
Your revenue is purely on API calls?
So disbursals are correlated, of course, with API calls.
And what is your ARR currently? What kind of growth trend have you seen?
We've grown about 120% over the past year. And so pretty much doubled. We are in this sort of high single digits of $1 million of life now. And we hope to double again over the next year or so.
When do you think you'll cross $10 million?
Hopefully within the next year.
Tell me about the journey of how you reached here. I believe you passed out from IT Bombay in 2009 and you started this about 8 years after passing out. So, just a summary of what you did in those 8 years, what led to the birth of this. And
It's an interesting story. One is, I started my career after, of course, 2009 was the great financial crisis year. So I started mostly in pharmaceutical consulting with the ZS Associates. Then I moved to Citigroup as a quant, worked with the trading desks in New York, and then a little bit in UK on structured finance. And then sort of I quit 2014, joined healthcard.com as a product manager focused on mobile. And basically in 2015 we had an idea of building a personal finance management app using phone data, and it was a consumer business. We started it in Gurgaon for about half a year ish, and then we realized that we were not cut out for consumer, and also I personally realized that I needed like somebody to guide me, or an ecosystem of people that we could learn from in terms of the startup stuff that we wanted to do.
did you raise funds or like when you launched this?
We were like very very razor sharp on building revenues. Even with a consumer startup, we were like, what can we sell, etc., right? And those days I would say it wasn't easy to monetize in consumer, and I think our mental model was also wrong. But yeah, we did pitch to a bunch of VCs and nobody really understood us, and you know it was interesting, frankly. Now we see maybe what it takes to build a consumer company and how it's different from building like a B2B business, right? And I think realistically, I would say the founder market fit wasn't there. So I'm guessing when we said XYZ stuff to some investors, they didn't really believe us because, we maybe didn't have the consumer flair, or maybe we were just talking, monetization too early or some of those things. And I think nobody wanted to take a, you know, punt on us from a consumer perspective, and I would say rightly so. So then we were like, okay, let's came to Bangalore, started on a logistics startup. I became head of product at GoPigeon Logistics, which was,
This was a job.
yes. So I came to Bangalore from Gurgaon and then met the folks here, saw what the startup vibe was all about and all that, and it was like really a new way to live. Felt, because I was like hardcore finance guy, jumped into the messy, domain of really tech startups from healthcard.com, but didn't really realize what was happening, right? And still very, very naive from a startup sort of vantage point. And then I came to Bangalore and I really did understand that what it was about, how do you iterate on products, etc. I knew product management, but from a business context perspective, etc. And how do you build a B2B business? So GoPigeon was interestingly a B2B business, and we were like, okay, we wanted to sell to companies.
They were selling fulfillment or software, like typically in logistics.
Software, software. Actually, it was a fantastic business. I really liked it, and after it got acquired, etc., we were, like it's just some execution stuff that didn't go right, maybe. But our competitors then, the smaller guys, are now unicorns. So Shiprocket was one of our competitors. We're like, okay, Shiprocket, etc. And they executed brilliantly. And then Shipsy, I think, came later, executed brilliantly. Now, very large companies, I would say. And we did realize that there was a problem in the domain, but somehow it didn't really play out really well and it got acquired. But maybe I got like a ringside view into how these things happen, etc. And then the good part was we met the other two co-founders at GoPigeon, and like we really hit it off, Srijan, Nikhil. And one of the co-founders is my brother, also a younger brother, Anant. So four of us, we were like, okay, let's do this. And you know that's how it started. We didn't really think of like building a company. As I would say, we there used to be in Bangalore, in Domlu, there used to be an Axis Bank thought factory thing, so, and like a startup incubator, and they had like a room outside which they had just kept so that some startups could 1 or 2 days come hang out and do their thing. And basically we like took over that room. So we were like, we could go sit, and we just, everybody started to think that that is like Finbox's room. And then one day Axis Bank folks were like, do you want to come in the incubator, so inside part? And we were like, yes, of course. And then we pitched and we did some stuff. We built a weird amount of stuff in the lending domain in the early days. We tried to build location intelligence, we built a lot of origination stuff, we built a bunch of KYC stuff in the early days, etc. And then what clicked was for us was our data stuff, because that is our sort of core work in our sort of earlier lives was with data and building sort of more high performance systems. And that clicked, and then we sort of went from to build in deeply the credit intelligence pieces, and it's been then one step in front of the other, I would say.
What is the first product which saw traction?
Device Connect is the first product. So basically, it is an anonymous data, SDK. So it goes into Android phones, and then say, it syncs a bunch of data anonymously about the users with consent, I must say, of course. And then we create a bunch of insights.
What kind of data? Like,
So this is like data from the Android phone. What kind of apps is the person using? Some data on anonymous transactional data that is through SMS, etc. You know, it could be location data. Right now, it's sort of become a little more restricted. So mostly, this metadata about the user, and then we generate through machine learning a bunch of analytics about income, propensity, credit risk, etc. And we give it out on APIs. So that was our first product, and it become very, very polished, mature, proved itself out during COVID, where we could predict a lot of delinquencies, defaults, and then we built a bunch of products on top. So
so this would be used, like, say, if I have a app for loans.
digital lenders, yes, with app.
Yeah. Somebody who's downloading my app, the SDK would be embedded into that, and then the lender would get this data and this recommendation through that.
Yes, through APIs. While while the user is on the loan journey in their app, they can just pull and make a real time decision about the user.
Okay. And who was your first customer, lender?
Home Credit was our first lender, first large customer. I would say there were like, and then we did have a bunch there. Really good sort of traction in the early days itself.
Home Credit is a startup or a traditional lender?
No, it's a multi-country NBFC which focuses on consumer durables and personal loans, automated. So it's like a robo lender in a way.
And how did you get the client? Like, who was doing sales?
Anant, my younger brother, was sort of, he knew the Home Credit folks. He had worked there for a bit, so he did the sort of closing of the sort of deal.
Got it. And which year did you sign on Home Credit? When was this?
I think we did the pilot in 2018, signed on 2019, and then of course fairly quickly COVID hit. I think 2020. By the time we were sort of maybe 6 months odd into what we were doing.
So, did COVID give you a lot of new business? Because a lot of lenders who were relying on offline would.
The first wave of COVID was a big pain, and then second wave of COVID, I think, meaningfully changed the way people were thinking about this. And see, this is an enterprise business, so I think the top of the funnel increased very fast. But of course, the implementation, deal closure takes a bunch of time. But I would say COVID second wave did change people's fundamental ways of thinking about this business, right? And it's big. We have been a beneficiary net. It did also, of course, destroy a lot of people's business downstream, and because we are a B2B business, if our customers don't make money or if they suffer, then we also suffer, right? So we supported a bunch of our customers in those through those times. And mind you, we were not a funded business. We just, in meaningfully, we were just bootstrapped for a bunch of time, profitable but bootstrapped nevertheless. And it was very hard for us to support our partners, but we did, because of course that's what you do, in while sort of building this business. And yeah, but it's played out nicely, I would say, over time.
Okay, so this was a first product of the device analytics. What was the next product?
The next product is called Bank Connect, which is essentially bank statement plus account aggregator, software development kit, and API. So basically, in the loan journey, you can take data from device, make decisions, but then you need to sometimes take data of bank statements, especially if it's a larger ticket size loan, or it's an MSME loan, etc. Once you get it, you have to, of course, create the entire user experience that is kick-ass, which also combines net banking, the way to sort of upload data, or a PDF, where we support 500 plus banks, or the account aggregator way. So you need to build a seamless user experience across all three, and you have to combine all three data sources seamlessly into one API. So we do that.
So doesn't account aggregator eliminate the need for PDF upload or the net banking login?
Our SDK has provides this sort of ability for the user to choose the mode. They will definitely choose whatever is the easiest, right? One piece is that account aggregator usage has meaningfully grown.
Basic definition of what is account aggregator framework.
So account aggregator, it's like open banking in India, and it's an RBI mandated regulated entity called NBFC account aggregator, which facilitates data coming from banks through consent. Your bank statement data, you can through consent submit to any regulated entity for a specified purpose, like taking a loan. Later it could be for health insurance, etc., as well, or it is already being used for, say, life insurance and financial underwriting, etc. But essentially, a user can provide consent to any other third party regulated entity to access this data for a specified amount of time. And in a loan journey, this is used to essentially take this data and create analytics to underwrite a borrower, right? And
So account aggregator is not the default option that people choose right now. Like I thought that it would be like maybe 90% of the people would be choosing that only because it's so much easier.
so, see, the coverage on account aggregator today is, I think, 18 odd banks. Out of that, I think some of them are a little stable. Most of them are new on the system, and it's being stabilized. But on the PDF side, we have 500 banks that are enabled plus, right? So basically, if you imagine, if you look at more urban population, we do think in terms of private sector banks, etc. But a lot of bank accounts are in smaller banks, in cooperative banks, etc.
Cooperative banks. Okay, so to get data beyond these 18 big banks who have signed up for this account aggregator framework, you need a PDF. And what's the net banking thing that you were talking about?
Similarly, if the borrower doesn't have a PDF, or sometimes, right now they want to submit it through their bank account password and username, then they can submit it by sharing that. Our system is fully encrypted, doesn't store any of these credentials. They provide this consent, we sort of get this data, and then that's it. End to end enables, it's like sharing this data. It's like, you could say, workaround for account aggregator. So in India we do have account aggregator, but say in the US, this is the only way, for example, to get this data. There is no central API integration stuff, I would say. So as account aggregator sort of becomes better, I think it's a more consented way, and it should become more dominant.
And what's the next product?
So then from Bank Connect, there is a bunch here. There is, something which is a multi-bureau connector called Bureau Connect, which is essentially, there are right now four bureaus. and we sort of enable folks to get this data, harmonize it, enrich it, and sort of provide this on a single API, which can again go into the decisioning system. And then there is Sentinel, which is a rule engine which sort of consumes all this, and you can just sort of devise your policies for risk-based pricing of loans. So, for example, what interest rate should I give? Who should I give to? Yes or no answers. What should be the tenure, etc. It's used by marketplaces for lender ranking. So it's like an end-to-end system for decisioning. So first is analytics. You have to take this data and sort of make your own decisions. How do you combine it? We don't sort of get involved, but Sentinel is a system which sort of combines everything together.
So like there would be like a scorecard for a borrower. Based on that scorecard, what to offer, that is what Sentinel does.
See, so yeah, I think at this point I would say there are three, to make a credit decision, there are broadly 2, 3 steps that you have to follow. One is identify which data sources you are going to get into the system. So you have to integrate and get this data. So this is, as I said, some of these data sources we provide. So these are our proprietary connectors. Some of them will be sort of more publicly available. So data. Second is building scorecards or predictors, right? So basically, what parameters are you going to get from this data? So that's also like deep experience, science, etc., the expertise that is needed. And then is the rule engine. So you put the scorecard, you put it into the rule engine, and you say things like, okay, if this is coming from an app channel, and basically in the FinBox sort of inclusion score is high, then pull bureau data, etc. All of this stuff, this orchestration logic is put into Sentinel basically, and you can sort of configure it, do canary testing, A/B testing, all of that. You're confident, you just deploy it, and then it's done.
Is it just one single number, or is it like on different parameters there?
No, it's a bunch of parameters depending upon the credit product. And
What are those scores?
so there is something called a FinBox inclusion score, which comes from our Device Connect product. And then there is a FinBox.
A good score will imply what?
Good score implies low probability of delinquency or defaults. So there's a bunch of different sort of scores, and then there could be various criteria on, say, pin codes. It could be based on various channels that this loan is coming through. A bunch of that gets sort of configured into a rule engine, and then you get like an automated decisioning system where as the loans are coming, you're deciding automatically.
And I'm guessing then the next product would have been what allows, like, say, an Udan to connect with an NBFC and start offering.
Yeah, so then, once we've sort of built these pieces, then we're like, okay, let's put all of this together into a cohesive whole, and which is, the API stack or API platform is for origination. So basically, a platform which is an API-led platform, and then it also has a bunch of interfaces and journeys for you to sort of put out and build an origination system end to end. So that's the next logical leap that we took.
Are you in India, or are you like, your customers?
So we are in India and Southeast Asia, Vietnam and Indonesia now.
Because, like, say, the account aggregator framework is there in India, but it will not be there in other countries and all of that. Like, what were some of those challenges to solve so that you could go global?
I think, see, financial services is a very, context specific or sort of local context heavy business, right? So you do have to understand in detail how, particular products run, and what are the regulatory environment sort of considerations of a particular geography. So on all the countries that we've sort of started business, we've sort of first built connects and understood, the local context, and then only brought in products that make sense, right? So for example, Device Connect makes sense everywhere where there are Android devices. We can generate a bunch of analytics which sort of works across the board. So typically we bring that first to the market, where people then can evaluate our sort of quality of the products that we build. And then as people become more sort of, we've sort of built a little bit of a brand in the geography, then we can bring in sort of more end-to-end products That's how we sort of think about it. But still, I would say early for us, I would say, to learn how to build these businesses outside.
What is your go-to market? How do you acquire clients?
So we run well subscribed newsletters. One is, I think there's a bunch there overall, 30,000 odd monthly readers on our newsletters and on LinkedIn also.
Okay, and these would be like decision makers in fintech and lending domain who would be reading.
Also, of course, a lot of startup and technology enthusiasts, etc. And we built this up over time, and we really wanted to do a great sort of good job in terms of putting out content. We realized that great content was a white space, good content was a white space in India, right? So we wanted to just enjoy building this stuff, this content. So we just started with a couple of blog posts and then sort of slowly build this whole newsletter piece.
Give me some examples of the things that the newsletter.
So this week's newsletter is all about, saying that, okay, can fintechs keep taking the jugaad route overall towards, building a business? And it sort of goes deep into, what various business models are and how they've sort of shaped up over time, etc. And then there was a bunch on co-lending guidelines and it came out. Then there was a bunch on the entire sort of UPI transaction decline rates and all that. So basically deep dives on sort of interesting topics that are relevant, and then also sort of lending related topics, etc. Account aggregator.
And how did you build the ability to create this content? Did you hire someone from the space or like?
So, yeah, in the very early days, I think we did write a bunch of these blog posts internally. And I think what it did was it set up the overall bar of where we wanted to be. And then, we were like very, very fortunate to get a great team doing this.
And this is your primary source of lead gen.
So this is one. There's, of course, we've recently started to build a sales team as well. So through connects, etc. And there's a bunch of blog posts also. So about 150 blog posts, which generates a bunch of traffic on our website. So we get a lot of incoming from there as well.
So your global expansion must have been like an organic one where you would have got inquiries from say Vietnam and you decided, okay, let's look at this market.
Yeah, so we do get a lot of inquiries from all over the world. But I wouldn't say the business that is sort of fructifying at the scale is coming right now. We're not. So I would say because Vietnam needs Vietnamese language blogs more than sort of English, I guess. So I don't think that incoming piece is coming from Southeast Asia, but Europe does. Eastern Europe, a lot of it comes from there. UK, a lot of incoming come, but we are not in those markets yet.
You did a $15 million fundraise last year. You know, was it like a walk in the park or was it challenging to? Because the first time around when you were trying to raise funds, you were not successful. You realized that maybe there is a founder market misfit happening there. And how was it like this time?
So eventually we raised total three times over, right? So we did raise a very small check from this fund called Arali Venture Partners in the early days, 2 crore, and then we did a convertible with IFL Finance. They were really supportive of what we were doing, etc., and very gracious in giving us money just before that COVID, or I think between the COVID waves, some point.
So a convertible means the money is given to you as a loan.
And it converts in the next round. Yeah. So the valuation is not decided.
Valuation is not decided. The valuation depends on what next round valuation is. Okay.
So, and but these are very small checks, so they didn't really meaningfully give us enough runway or confidence to really spend big or to really dip into the negative territory. So we were always building with sort of sustainability in mind. So we were always saying, okay, can we make money to pay payroll and all of the AWS costs, etc., that accumulate? Now those things were super interesting. That built a bunch of muscle. But we were also like, okay, we are not the kind of business which is going to raise like large money and etc. Let's just not focus on that. And in the meantime, we did want to raise money, and we were going towards like, we had hired a banker, but I would say the investors found us more than us finding the investors.
Amazing.
And I think we were super lucky to get, the kind of investors we got. I would say very supportive, sorted folks who understand business well, and essentially are there when you need them, which is very nice, I would say. And I think we've heard a lot of horror stories with investors, etc. I would say our experience has been very, very different.
Who led the round? This 15 million round?
A91 Partners.
Okay. And Flipkart also invested, right?
Flipkart invested, Aditya Birla Ventures invested.
Why did Flipkart invest? Was it purely financial or also like a strategic?
Yeah, so they have a fund, a small fund with financial investments.
Okay, okay. It's not like they want to start offering like BNPL or something or using your product like that.
No, if that happens, it is going to be a separate conversation, I would say. It's not linked to the investment.
How big is your organization?
It's now 130 people.
So tell me about building an organization of 130 people.
That's an interesting question. See, we've been super fortunate to have like the earliest guys with us, right? So now, what 6 year old startup? So we have guys who are 6 year old with us, right? We have guys who are 5 year olds, 4 year old with us, and I think we've been able to do that, and it's meaningfully, and we are super sort of thankful for the guys in believing in us and sort of trusting us. I think one piece is in the early days when say you are up to say a 50-60 people organization. I think spending a lot of time helping people understand your ethos, your culture, how do you want to do stuff is very, very important. And I think we are now sort of grown into a size which is where this approach sort of just spending time generally, because we don't like per unit team member we have very little time today, right? So it doesn't really work. And I think what we are now trying to do is magnify this communication, maybe through guys who we already have, the sort of more vintage guys with us. They're still young though, but they right out of college they came to with us, etc. But they understand this really well, and to sort of help them sort of get to this role where they will be mentoring, coaching. That's one. I think we need to improve a lot on how we communicate internally, which is becoming very important. I think to get everybody really aligned, motivated towards the goal. And given it is a complex business, I think that is something that needs to be done.
This communicating internally is an interesting issue. Like, I mean, do you believe more in like, say, a Slack based approach where there's Slack and everyone is communicating and so people can read and all that? Or is it more like, say, town halls and offsites and, that kind of a approach? What do you think works?
We feel both are important, right? Because if you talk sort of sharing ideas, so you need to be able to refer them later, if and and I think people need to do a lot of written communication, and we have subscribed to a bunch of tools internally, and people do write a lot on Notion, etc., Slack. And I do believe, but it doesn't substitute town halls, etc. Offsites we do purely for fun, though. We don't like mix work with the offsites that much. But I think what we want to do essentially going forward is at least have a. We do all of this, but we don't have like a set cadence. I think we will set that up, sort of give people an overall understanding of how this works.
What's the long-term exit for investors, for the founders?
At a personal level, or at least the founders don't think about exit, at least at FinBox. The reason is because when we built the business, and even now it's a sustainable business. It makes money, and we are enjoying it tremendously, and each phase brings itself a plethora of learning opportunities, right? So We don't think about exits ऐसे तो. We do want to build a very, very interesting and large technology company. And we feel the revenue opportunities are insanely large in this space. And we can build a very, very large business. So, we can build $1 billion ARR business in this area, because this area has infinite adjacencies. It's the deepest part of software. So as you can imagine, every software company actually sells to financial services. Any large software company, if you see, their largest chunk of revenue comes from financial services, and there's a lot to build. A lot of infrastructure is very, very legacy. There's a lot of change. India is a very fast moving market with a lot of opportunity. Every day you will get new opportunities to build something interesting. India scale is so insanely large compared to anybody else in the world, right? That you end up building very, very robust systems, right? And as you build them up and they mature, we feel that the quality of systems, as all of the flakiness starts to go away, as our startup ecosystem also learns how to build really high quality products. So the core, the scalability is there because India is like at scale market. The packaging, etc., we're getting there, and we feel that in the next couple of years we can really open up all of the developed markets, etc. And the kind of stuff that we have seen, nobody else will see. Basically, each startup works with so many users that they're larger than potentially countries, basically.
You said there is potential to be like $1 billion ARR business here. Is there a comparable business in the West in this space?
So, so there are businesses which are at 200 to $300 million of ARR today, and they're listed companies.
And they're in this whole API and data space for lending.
Yeah, so they're sort of, you could say, credit infrastructure space. So very few companies globally actually marry these two spaces. People are either technology companies or they're data companies. We are like a little bit of both, because we are four co-founders and everybody sort of has their own specialization, and we drove very hard and fast on both things simultaneously. But a lot of companies sort of either are more technology, they acquire data capabilities, or the opposite, right? And but there are companies which have, so there are companies like Blend, there are companies like Encino in the US, which are infrastructure companies and are at couple of $100 million of ARR, and they're growing fast. And they're only in the US in niche segments. So these are like only single product companies from, say, home loans, etc. Or they're only like very single segment companies. So in the US, they're only at credit unions, etc. Only in the US, these companies will be able to achieve $1 billion in ARR, I guess, in the next 5 years. So you can imagine the entire sort of global financial services infrastructure market is very, very large, I would say.
Who are your competitors in the Indian startup ecosystem in this credit infrastructure space?
So, see, there are a lot of credit infrastructure players, but they are in their own area. So, basically, credit card infrastructure, etc. There's a company called YAP M2P, which started in the credit card infrastructure space. Yeah, basically, I will say, there's M2P, there is, who's actually, there aren't like really direct competitors.
There is a company called Digitap.
Digitap on only the data APIs part, right? So as I said, right, we are like, so we've sort of built like a more infrastructure mindset in the company. So we have like APIs for orchestration, etc., not only data.
And that brings us to the end of this conversation. I want to ask you for a favor now. Did you like listening to this show? I'd love to hear your feedback about it. Do you have your own startup ideas? I'd love to hear them. Do you have questions for any of the guests that you heard about in this show? I'd love to get your questions and pass them on to the guests. Write to me at ad@thepodium.in. That's ad@thepodium.in.